Today, I am joined once again by Dr. Mark Thornton, Senior Fellow at the Mises Institute. I am so glad to have him back. Well, the last time we spoke was in February, and wow, it's not that long, but a lot has certainly changed during that period of time. So, thank you so much for being here today, Mark. I really appreciate it.
Lynette, it's great to be back on your show. I can't believe it's been that long. It seems just like yesterday that we were talking, but indeed, a lot has changed.
Really? So one of the things that I wanted to ask you is, the stock market, and you just said that before we came on air, what an interesting market. But the stock market is looking really strong. But households are really struggling. So, I mean, I don't know, everything is pouring through the AI lens. What do you think is going on?
Well, the confusion really is that interest rates seem to be fairly stable over time. They're higher now than they were when we talked in February. The long bond and the mortgage rates are up and so on. But the real interest rate in the economy, if you take the market interest rate and you subtract the government measure for inflation, that real interest rate is very, very small. And that's what stock market's like. They love that,
Mhm.
the fact that they can borrow money, and the government does this too. They borrow tons of money and then they pay it back with depreciating dollars over long periods of time. So, the stock market and all these data centers and AI companies, they've been borrowing money hand over fist. And of course, that's what's been propping up the stock market. If you look at the average stock in the S&P 500, it really hasn't gone very far up at all over the last year. So it's
Right.
really the leading edge of the stock market where the top 10 companies are very, very large in terms of their stock market valuation, and they have a tremendously high weighting in the S&P 500, which is tied to a lot of retirement accounts.
Mhm.
And most retirees or people in the workforce saving in stocks in the S&P 500 or just stocks in general, they have no idea of what a high weighting they have to all of these high-tech data centers and uh, artificial intelligence, Magnificent Seven companies. That's a weighting of about 40% of the whole stock market. And, if we look at the valuation measures of the stock market, how much leverage there is in the price between how much they're earning now and how much they're worth in the current stock market, it's a very, very high amount. And those measures, and there's several of them out there, they're all at historical high rates. The Case-Shiller measure of valuation of stocks is at its highest rate, its highest level in the last 150 years. So that's very high. And yet the working class is seeing their purchasing power of their income erode away over time because they're not borrowing money to invest in stocks with these low real interest rates. They're paying the higher costs of living for food, clothing, shelter, gasoline,
Everything.
uh, auto insurance, car insurance, home insurance. Mortgage rates are going up, housing prices, and housing, the cost of housing is very, very high at an all time high level. So, that's what causes this uh, break between the very wealthy who own a lot of assets, land, stocks, bonds, etc. They're getting all the benefit, and the working class is just seeing the purchasing power of their wages being eroded away by inflation from the Federal Reserve.
You know, There are so many things in what you said, but one thing that I really want to bring up, because this is a recent kind of an aha moment, and that is the most important function of money is to hold the value of your labor through time. That's the most important function of money. This is money. Silver, this is money. And that's the job that they always perform. So we were trained, everything is perception management, isn't it? And so when you say that it's a store of wealth, I don't think people really comprehend what that means, that it's a store of wealth. But when you say that this is supposed to store the value of your labor over time, this is labor that you already did. You can't go back. That's finite. But in the current system, with this garbage, well, this is corporate debt. This isn't money. We've been trained to think of this as money, but this is actually corporate debt that they control. So we know this does not hold the value of your labor over time like this does. And I was talking to somebody yesterday and he goes, "Oh, yeah, I know it's a store of value." I said, "Oh, it's more than that." And so when I explained to him that it really is supposed to store your labor, it was like a light bulb went off. And honestly, the first time that I wrote that, when I'm working on the series and this came out of my pen, I went like, that's what people aren't seeing. That what it's really supposed to do is maintain the value of your labor that you cannot work again. Right? So this is finite. That's why it does it. This is infinite. You can make as many promises as you want because you're not going to fulfill them anyway. So what's the difference? And
Well,
go ahead, you.
yeah, that's a great point because, the currency that the government prints up, that's currency. Gold and silver can serve as currency. A lot of things, that's what really defines money is the fact that we can use it in exchange. Now, what determines whether it's good or bad for the functioning of the economy and for everybody fairly in that economy is its store of value. Gold and silver held its purchasing power in the United States going back to the founding of the country and, going back to the founding of civilization, really, with the original civilizations in the Mesopotamia and the Middle East and all of those places where cities started to form around the use of silver coins or silver and silver coins. So the purchasing power, you're right, it helps you store your value of your labor for future use. And that's a very important thing for a variety of economic functions and the general stability of the economy. And people say, well, how about this gold and silver versus, paper is so easy and my debit cards are so easy. Well, gold and silver can be converted into paper banknotes. It can be converted into electronic forms, and they have debit cards where you can store your value in terms of gold or silver, and then you can transact in terms of these paper government dollars. But if you think about it, when gold and silver were money and you put your money in the bank and you only earn 2% interest, but also the gold and silver had increased purchasing power by a percent or two. And so you didn't even have to invest in stocks and bonds and things like that. The bank was intermediary for you between your savings that you wanted to do and putting it to work in terms of building homes, building businesses, paying for accounts receivable, and paying people wages and all the other functions. And I must say that when you have gold and silver as money and as a store of value, you get better overall results in the economy. So, where they can both function making trades and exchanges, but if you look at society on gold and silver, where people can accumulate value over time without being robbed by the government's inflation, well, you have rising standards of living, you have people with accumulating value, they have a commitment to the local economy, they have stability for their family, they can make big purchases in terms of a home or an emergency or a college education and those kind of things. And right now, we can see quite clearly that rising prices for things like homes and college educations and medical emergencies are now beyond the reach of the common American person. And, and so the paper money is obviously not doing that because it's ripping us off on a regular, ongoing basis. And so that's in fact, I think that's really important because Washington D.C. they're always, interested in, creating some kind of phony capital to create phony investments in particular industries because they want to generate more tax revenues for themselves. And what we really need in this economy more than anything is a renewed commitment to personal savings. Americans used to save 10, 12, 14% of their income per year. Now, the personal savings rate is only a couple of percent. And of course, the number of households without any savings or with net debt, they don't have any assets. If you subtract away all of their debt and liabilities, it's just a completely different picture under gold versus under paper.
That's exactly right, which is why my battle is to get sound money gold, redeemable, must be redeemable, back in the global monetary system again, because I know that you and I see the same changes, right? And, we talked about earlier, you talked about the convenience. Well, yeah, carrying around all these gold coins, it might pull your pants down. So they created a claim and got us used to that. And then at the same time, they created this claim. I don't know what I did with the $20 bill. Here it is. They put the Federal Reserve note in place, and all three of them were at the same time at the same level of purchasing power. And so people thought they were the same. And then when they took the sound money away, but now we're transitioning into more control. So we went from ownership, because you hold it, you own it outside the banking system, to a claim against this asset, because this is the asset itself, to debt. They take these away. So what's happening now? Because whoever controls the rails of the system, and this takes us all the way back to that first question where we're talking about the herding and the crowding and all of the flow of funds that is going into the AI trade. And how do you feel about that circular funding, where you have a company like, I don't know which ones they're all doing it, any of the AI companies loaning money so that this company will buy their chips, which looks like income on their books. And it's this big circular pattern where these corporations, the large tech companies, used to be cash flow positive and fund their growth out of the cash flow. Now, there's three of them that I know of off the top of my head that are cash flow negative, and that's going to get a whole lot worse. I'm wondering if this looks to you anything like what the industrialists did back in 1928, transferring the risk from the few, from those that understand what's happening, to the many, because it's those institutional investors, to your point, the institutional investors that are putting your funds, your currency, into this circular, unsustainable, extraordinarily expensive build out that's done on debt.
Yes, Lynette, that's something that typically happens at the end of the business cycle. It happened in the late 20s when Wall Street attracted in a bunch of ordinary people who would have normally just been using a savings account, and they were brought into the stock market. They were put on margin accounts, and they lost everything. And the companies right now, they're essentially sharing capital and sharing revenues to make each other's books look
Yeah.
better for the purposes of issuing shares and issuing bonds. And I wasn't around in the late 1920s, but I was around for the tech stock bubble of the
Oh,
late
and
1990s. And in a couple occasions, I got burned because companies were booking revenues they were supposed to be getting from other companies, and they were essentially, both companies were booking the revenues to make their books look better for stockholders and stock investors and initial public offerings and new offerings and things of that nature. So they were intermingling their financing in a way that is atypical. Typically you get a creditor such as a bank or a bond issue that is evaluated independently. And in order to circumvent that oversight that typically happens in a market economy, they intermingle their financials and their revenue sources. I remember one company during the tech stock bubble that they said that they were getting all of these revenues from company B, that they were selling them because they barely had a product and they didn't have any revenue. So they made an arrangement with this other company to get, $100 million in revenue. But the other company was actually you know, uh, billing out the 100 million, but they were getting back 90 million of that because they were doing 90% of the work. So it was just throwing the numbers on one set of books and then bringing it back on another. And in the short run, that looks fine. Uh, Appearances, work in the short run, but of course, none of that held up and the whole tech sector fell as a result.
well, it you know, I've been feeling for a while, so I want your opinion on this, but I've been feeling for a while that we are in the melt up phase. War, no problem. Oil above 100, next day it's below, all of this volatility. The banks are doing fabulous. And the derivatives are exploding while even that netting is getting bigger. So, what do you really see that's that's true because people don't know what to look at. What should they be looking at to know the truth versus the lie that we're being fed?
Well, I mean, I think you should look at the overall stock markets, which have been going upward at a very high rate now for 17 years, which is very unusual. You should be looking at those valuation measures that financial analysts put together, which show that companies are highly leveraged and that the price of their stocks are way, way above any kind of historical averages. And then also, we want to look at that new money, the money that's gone into private equity, for example,
Mhm,
and
mhm.
private credit. Private equity is essentially very similar to the junk bonds of the 1980s. And, so people have invested in it, anticipating high rates of return because of the risk. But then, of course, built into that is that a lot of those ventures are going to fail. And of course, they don't fail in the beginning. It takes a while for these private equity ventures to fail. And as things got tighter, they developed the private credit to filter in money from outside the industry into the industry to keep some of these companies going, to re-lend more money so that they could meet their expenses and their debt obligations. And then as that started to dry up in December, late last year, the Fed said, well, we need a $40 billion a month liquidity program in the marketplace. So this is being propped up, and of course, the
Mhm.
stock market now, the last several months, has been propped up by all of the hype surrounding artificial intelligence and the projections of a few analysts about really a brand new industry, which nobody really knows how things are going to work out. And this is also common in the later phase where a new high tech industry develops with no track record, right? There's
Mhm.
no track record of revenues and costs and expenses and payouts and dividends and so forth. And so that it's an easy place to sucker people in.
Yeah.
And that's what it's been doing, of course, with computer chips and AI and data centers. So, the psychological feeding frenzy that happens has been happening, and it's been able to shake off higher energy prices, higher bond prices and interest rates, wartime conditions, higher energy prices. But the reality, of course, eventually comes due. It emerges. These all of these ventures eventually have to report,
Mhm.
and they have to put their own projections in line, a better line with reality. If if you've been increasing your sales of computer chips by 100% and then 200% and then 300%, well, that obviously can't go on for very long. Eventually, these data centers will come online. They'll stop buying all of the inputs. And what they're going to find is that not only has the cost of constructing all of these things and putting together all these artificial intelligence systems in place, the costs are going to be much greater. I mean, we've seen that time and time again where, for example, they're all poaching the computer engineers from
Yeah.
each company by paying them tens of millions of dollars just for one person. And the chips have gone up in price. So their costs have been going up in price, but their projections for revenue, they've been projecting higher and higher revenues, but they're all going to be coming online, and all this capacity is coming online so that the price that they're going to be able to charge people is not going to materialize, I believe. I think, artificial intelligence is going to be a helpful thing. It's going to help business. But certainly there's not, um, according to some of the experts, there's not enough demand currently to fulfill all of the promises and projections that are being made about this industry, unless they have some secret source of business in the government. Maybe the
Outer
government's
space, maybe on the moon.
yeah, maybe the governments are promising them, hundreds of billions of dollars in contracts to keep tabs on taxpayers and citizens and voters and journalists. I don't know what they're doing, but the revenue, uh, the projections of revenues that look true are not sufficient to cover the substantially rising costs that have been incurred in this, you know, thrust of investment.
Mhm, mhm. Well, you brought up a few things in here because so much of that debt and that private equity isn't that going into those retirement accounts? right?
Oh yeah, I mean that they just passed a law saying that individuals could invest in these alternative investments, and
Right.
they said they were doing Americans a favor by doing this, but of course all the money that was made in private equity was made by the people who put these deals together.
Right.
No money has been made. If you look at the broad uh, stroke of these private equity investments, they're being, people want to get their money out and they're not being allowed to, which is a very bad sign.
You know, that brings me to the next point, right? And let's talk about real money, right? With gold, there's no intermediary. You hold it and you own it outright. But with any of these other systems, whether it's a bank or a brokerage or Wall Street, whoever it is, you need permission to access what you perceive as your wealth. And to your point, permission can be denied. If you're holding your gold and you're holding your silver, there's no counterparty risk. That's also the difference between the money, right?
Oh, yeah. I mean, and if we go back before central banks, what we find is that people did hold gold, silver, and copper coinage on their person or in their house or in their business. Now, if they had a lot of money, they would want to safeguard it by typically putting it in the bank. And then banks would issue bank notes, which look a lot like our paper money today.
And
But
a note is a dead instrument.
yeah, I mean, but that was money that if you needed to make a big purchase, you would get the banknote and go and make the purchase for a car or a house or whatever, a farm. But the average ordinary person, you could carry around a little coin purse with gold, silver, and copper coins, and you could go on a shopping spree, all around town, get cabs all around town, and you'd still have money left over with your little change purse. And of course, that can be digitized in today's world. But yeah, I mean, holding gold, and you mentioned earlier about gold coins, making my pants fall off. Well,
That's a good problem.
that would take a lot of gold coins. Um, that would be, a pound um, of gold coins right now is the equivalent of $80,000. So just 1 pound of gold, I could go out and buy the most expensive car pretty much on any car lot in town. So the weight and the encumbrance is a complete misnomer.
It is.
Gold and silver, actually, those systems, they created a lot of innovations down through time, going back to the Sumerians, 3,000 years BC. I mean, they had this idea that silver was money, and then they had coins that were money, and they kept books in silver denominated units, and then all sorts of new innovations took place down through time. And almost all of the innovations that we've seen, except making everything electronic, was done before central banking ever showed
Right.
up on the scene, before paper money ever showed up on the scene. It's really with government monopoly over money and banking that we see innovation, slow down. And it's only the outside inventions of things like the internet and in credit cards and things like that um, in the credit card use system that's private all around the world, those were outside the government monopoly. So governments don't engender innovation and consumer satisfaction. They actually hinder that whole process. So we would expect that if we were able to go back onto gold and silver money, that innovation in those things, for example, keeping tabs on the banks where we deposit our money, we would expect innovations to better ensure that the money was actually on deposit and that banks were only lending out either their own money or the money that they receive from bonds or the money that they receive from long-term certificates of deposit and not demand deposits at the bank. And so that's what we would be looking forward to. And rather than all of these claims that the gold and silver are antiquated and can't keep up with the new world, the
That's
exact opposite is the truth. Gold and silver and private banking were very, very innovative and gave us basically all of the primary features that we like and use today.
Well, and not only that, but back then, what you had were ebbs and flows because you'd have innovations over here. And so money would flow to those innovations and they became wealthy. But you had another place over here had to innovate because they were poor. They needed to be creative and create something. And so you had ebbs and flows with the central banks. You have booms and you have busts and you have chosen winners. And I
Yeah.
really want to go back to the AI because, what about all of this lobbying to get the rules set up the way these companies want them set up? So they're the ones that are actually controlling the new, or they're building the infrastructure for the new monetary rails. But if they're the ones that are building that infrastructure, who's really going to be in control and who's going to tell you your value?
Well, never in the history of man has special interest groups held a greater control over government than it currently exists today and in the United States. And really, at no point in U.S. American history have politicians been so thoroughly been disconnected from representing the voters in their districts and in their states. There seems to be a complete disconnect. And that's why not only is consumer sentiment statistics showing consumers are in a bad situation and are thinking very gray sky type territory, but also public opinion polling shows that two-thirds of Americans do not like what the government is doing, do not trust the government, and only about 10% of those polled actually think the government is doing a good job. So I think that is really showing up. It's not like Americans are completely blind to the general pattern that we're seeing, and AI and data centers is a particularly better advertised phenomenon, especially if they're building these data centers in your neck of the woods, but they are being given privileges. They are being given government contracts. They are being given, prime access to electricity, to water, to land rights. Right on down the line, Washington D.C. is writing a blank check for all of these companies, and we wonder what Washington, D.C. is getting back in return. Obviously, they're getting massive campaign contributions from these.
Hello.
Yeah, I mean, and but what else? What else? Why else is government so highly interested in all of this high tech uh, data centers where every piece of information about my life and my assets and all of that is being known and accessible to the government, and also the of course the digital currency. That's another case where there's so many people in Washington, D.C. that want this central bank digital currency or some variant of it, stable coins,
Mhm.
something to track Americans' every last penny
Mhm.
that they spend. Now, you
Or that
know,
they earn.
yeah, and that they earned. Of course, we already have electronic money, so consumers have abundant access to being able to transfer their money. So it's going to provide absolutely zero value to the average worker, the average citizen in their use of money. The only value that I can see of it is in tracking
Yes,
everything
it's
the government
control.
does. And, they always say, well, what about the criminals and, all that kind of stuff? Well, I mean, that's the uh, pot calling the kettle black as far as I'm concerned. And, privacy is not just a flippant saying. That's a
Mm.
basic human right. Privacy, which our government has been ignoring and denigrating and destroying so quickly in the last couple of decades, that's a basic human right. That's part of our property rights. My money is my money, and the use of my money is for me to know and for you to never find out. That's my business. But the government, of course, wants to know everything. They want to be able to track us. They want to be able to influence us, and they want to be able to uh, stop and change our behavior um, completely at their own will. And that's again a basic violation of our property rights. It's a basic violation of our human right to privacy, and it's un-American, of course, as well, and or anything resembling the rule of law. The rule of law mandates that you should have privacy rights over all of your property, and the government is clearly out to change all of that.
Well, they have, and there for me, frankly, there is no distinction between government and corporations because I could show you from the horse's mouth how corporate debt, private corporate debt, back in 1914 was turned into Federal Reserve notes. That's from the horse's mouth. So we went from ownership to permission. And this is a depiction of a cryptocurrency in gold. So you think it's this, it's perception management, but to control owner. And it's so important. Ownership of money. This is currency. This is not money. I've been creating a new habit for myself because, even those of us that understand all of this, we've still been trained to think of this as money. This is not money. It's currency that they control. This is money that they don't control. That's private, to your point. But even this cash out of the system creates a blind spot for the governments, to your point. Once they get us in this, there's no blind spots. So we have to move quickly to do this because I think, why do you think that socialism is attracting so many young people? And this is a movement that was really born out of Occupy Wall Street, 2008 financial crisis.
Well, yeah, I think that's a very important issue, but I do want to follow up on your other point
Right?
about the fact that Bitcoin has been illustrated with gold and silver coins and things of that nature. There's still a remnant in our thinking about gold and silver.
Yes.
The top prize is the gold prize, the second place prize is the silver prize. And companies that want to advertise their product as the highest quality or the most reliable, the most durable, they say, well, this is the gold standard of our industry, or our production process is the gold standard. So we still have a remnant of thinking, and that's why your program that connects that remnant of the thinking to the hardcore metal and money and all of that stuff is so wonderful. Now, of course, the younger generations are losing that connection.
Mhm.
Everything is electronic, everything is free. They don't have the same connection to money. They don't even use money, they only use cards and electronic stuff. And so they're completely detached even from cash. And so they're very susceptible through that kind of exposure and also through the educational process, which
Yeah.
is thoroughly socialist and Marxist.
Mhm.
They don't teach out of Das Kapital in public schools, but they always are presenting the world to kids that government and technocrats are our saviors, generals are our saviors, and so forth. And business people are the evildoers. Every time you see a business person, it's always in a negative light. When in fact, businesses provide us with all of our food, our clothing, our shelter, transportation. The government doesn't really provide anything,
Right.
and so that's where the current generation sits. And they also, they're not dumb. They can look around and they can see, that my generation has run up $40 trillion in national debt, that my generation has voted in extra Social Security benefits. Now the system is running in red ink. My generation, and through government policy, has made housing unaffordable, has made higher education unaffordable and of lower quality. My generation has made, uh, through the policies of government, has made healthcare not only unaffordable, but the insurance is very unaffordable, and the quality of our healthcare in the United States has gone down, 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 even as Americans care less and less about maintaining their own health, their own vigor, and staying away from. There are people right now that are so desperate that they uh, don't have health insurance, they can't afford health care because of what the government's done. And so they have to more or less try to maintain their health on their own because they don't really have an alternative. If you go back 100 years, when we had a free market economy, anybody could afford health care in the United States much more readily than in other countries. We did have the best health care of
Yeah.
any country. We had the best health of any country, and we had a huge nonprofit healthcare provision system that was provided by charities, that was provided by churches, and civic organizations all across the country. So, they're not, but of course, nobody tells these younger generations any of these facts. They think that, everything that's important and good has emerged in the last few years because of government and Bernie Sanders and Barack Obama and whatever. And so they're not blind, but they are also greatly misled, and they don't understand the difference when you break it down between what the free market does on its own, independent of government, and what government does on its own or in intervening in a kind of a secret way into the economy, which ultimately undermines progress in market institutions.
Well, I mean, I've been noticing a big shift in younger people in their 20s, 30s, where they are disillusioned because they were promised. I mean, what was the American dream is you follow this path, here's the path, follow this path, and you will be able to educate your children, take a vacation, buy a house, retire, blah, blah, blah. And these kids are coming up now and they're going, that is not affordable. This has been a lie. We have been abused. And it's not just happening here. And so I think that that is pulling people towards socialism. And what are they fighting for? Rent control? How
Right.
about money control? Anybody out there that's watching this, if you are part of a socialist program group, invite me to speak. Invite Mark to speak. Start to learn what's really happening, because I don't think that socialism is a whole lot better than what we've got. We, I mean, really, not a whole lot of difference. Sound money that's redeemable gives us, the public, our power, because this was outside of the banking system and private. So I'm actually seeing a shift, and I'm seeing it all around the world. Look what's happening in India with the younger people that are coming up. There are no jobs, right? And that's not going to get better for a while. I'm pretty darn sure of that. So I think this is actually an opportunity for us to help educate, because I feel like they're looking for answers.
Yes, they're very smart and they're very curious, but they're kind of ticked off about the whole thing. And the Democratic Socialists and their supporters, look at, to your point exactly, look at what they're advocating. They want to nationalize health insurance because health insurance is so high. And as I explained, that's because of government subsidies and intervention. They want nationalized subsidies for higher education to pay off their loans and to guarantee jobs, minimum income, and so forth. So they're looking at the problems that they think are being caused by the free market, when in fact they were caused by government intervention, and they want to go in the wrong direction towards an even more severe form of government control. So, that's my job. And unfortunately, I seem to be losing the battle, but I think
feel
we'll
like I'm winning
ultimately,
it. Mark,
yeah,
we should work together on this. We should.
yeah, yeah. I mean, I think we're ultimately going to win the war. But it seems like we're losing the battles right now for the hearts and minds, particularly of these younger groups. I mean, they're attracted to Democrat socialism, where things are nationalized by the government, taken over completely by the government. But they're also attracted to Austrian economics and the free market and free market thinkers and shows like your own. So I'm still overall very, very optimistic.
I am too. I really am. And I think, this is probably a pretty good place to end this conversation, though I could frankly go on for hours and hours with you. But is there anything else that it seems like we didn't talk about hardly anything, and yet we've talked about so many important things. But is there anything else that you would like to bring up today that our audience really needs to be paying attention to or know about?
Well, thank you, Lynette. Well, I have a weekly podcast called Minor Issues. It's 10 minutes long. It drops Saturday morning at 6 o'clock. And it's just a short podcast about an issue from the perspective of an Austrian school economist. And if you go to our webpage at Mises.org, every month this year we're giving away a free monograph on Austrian economics. And this month, it really speaks to the point of this episode, is Murray Rothbard's little book called The Case for a 100% Gold Dollar, where the dollar is represented by an amount of gold, and your demand deposits, your checkable deposits. You either have the coins on the outside or guarantee that they have 100% of your deposits on reserve in the bank. So, and then he explores all of the benefits, which are no inflation, no business cycle, and no, crummy outcomes in terms of the distributions of incomes in society that we're suffering today, the K-shaped economy, and all the rest.
Well, that is amazing. All of the links below. We have to just keep doing the good fight, showing up, and trying to help people understand what's really happening, not just on the surface of things, but it's underneath that you can't see. That's where the danger is, because they are definitely building the rails to capture all of us. And so we are moving from a permission based system into a control based system. And frankly, that scares the crap out of me. It really does.
Yeah.
Thank you so much for being here, Mark. I think we should do some things together. I think we can do some great things together because you're brilliant. You know so much, and so am I. So I think together we can really ratchet it up even higher to help people understand so they can make educated choices that puts their best interest first. And let's get sound money back in the system. Thank you
Amen,
so
Lynette. Thank you for all you do.
Oh, thank you for all you do. And there's lots of us out there, and I really know we're making a difference. And I can see it in younger people. And yeah, I'm very hopeful. And I know that together, if we can get 3% of the global population to convert their garbage fiat into sound money, we can demand sound money back in the system again. 3% is more than 1%. And until next we meet, please, wherever you are in the world, please be safe out there. Bye bye.